Joel is literally speechless, but we're gonna go digging for value without him. Hi, I'm Allison Southwick, and usually I am joined by Joel South and Taylor Muckerman,
right.
but I've got Taylor today because Joel literally lost his voice at the Super Bowl.
There's something about him being a fan of the Seahawks, I guess. They blew away even his expectations.
Right? Even his bullish expectations. So he's out. It's just the two of us. So let's get started.
Yeah, well, let's do it.
Let's do it. We're going to head to the headlines. First up, our headline is actually a press release. It's from Chevron Energy Technology Company and GE Oil and Gas. They have announced the creation of Chevron GE Technology Alliance, which will develop and commercialize valuable technologies to solve critical issues for the oil and gas industry.
Sounds about right, yeah.
Right? Like, this is fantastic marketing speak that you expect from any sort of press release from a corporation. Translate it for me.
Basically, they've worked together in the past, but nothing to this capacity, what they're expecting this alliance to be. It's going to be strictly downstream, so on the production side of things, they're going to be doing a lot of pumping out in the fields. And so you have to look at a lot of the flow meters that GE is known for providing, translating over into energy. And so basically, it's going to be the R&D side from GE, and then they have the field testing with Chevron. So I think it's a great match. GE's been moving into oil and gas a lot more lately, so teaming up even more so with one of the largest energy companies in the world outside of an acquisition is a great play for them.
So how serious of a shift is this for GE? Like, should I start thinking of them as an energy company at some point, or is this still a minor bet?
I wouldn't write it off. You look at just last year, they spent $3.3 billion to buy Lufkin Industries, which you look at this company, they're a pumping equipment maker. So GE is really betting big on the shale revolution that's been sweeping the United States and a little bit into Canada over the last couple of years. And so many people expect that to continue internationally. So that's really where they've been focusing a lot lately. They even made a purchase of a Cameron division in December. Not $3.3 billion, but an acquisition nonetheless on the compression side. So they're really playing the field here and developing the oil out of the ground. So yeah, one day they could be a 50-50 split industrial energy. I wouldn't write it off.
All right, let's just head to our next story then. We're going to head over to breaking energy. Forget big tobacco, it's big carbon that is making news.
Ooh.
According to the Rolling Stone, and Breaking Energy is kind of upset about a recent article from Rolling Stone, which claimed that similar to how U.S. tobacco went into all these overseas markets as consumption in the U.S. started declining, carbon companies, or fossil fuel energies, they are seeing consumption go down in the U.S. So they're heading overseas and pushing fossil fuels outside the U.S.
That's right.
Kind of aligning energy companies along with those other sin sort of companies, vice companies. Whose side are you on here? Do you think that's a fair comparison? Big carbon, big tobacco.
I really don't. Breaking Energy, I think, has got the correct argument here. You look at coal and natural gas, really the only two fossil fuels being exported from the United States overseas. You look at petroleum products are being exported, but those are being produced on a global scale, so we're not the only country that's distributing those around the world. Coal, we are a big producer of coal. You have to agree with Rolling Stone there, but these countries aren't being forced to use it. You look at China as the largest user of coal. They've been doing that largely on their own. We've just been supplying a lot of it.
No one's forced to smoke either.
Yeah, no one's forced to smoke either. It's an addictive habit, but I don't think energy production is addictive. It's a necessity. So you can't really tie these two together. You can quit smoking and still survive. Most people in third world countries need this energy to purify their water, to power their homes, their fields. So without our assistance, you could see these countries in a lot worse situations than they are right now.
So who are the companies that are going out into these countries the most?
Well, I mentioned Peabody Energy. It's the largest privately held coal company that investors can get their hands on. Produce a lot of coal out of the United States as well as Australia. So naturally they team up with China on the export side of things. And they've actually been working directly with the Chinese government on a project they call Green Gen. It's the only non-Chinese company operating here, so it's interesting to see a coal company over there. But what they're doing is they're really helping enforce clean coal over in China, which the United States has really been moving forward with. So yeah, they're selling it, but they're helping clean the environment over there as well. Another US-based company, or a team of companies, I should say, is Southern Company and KBR, who are together producing the cleanest coal plant in the United States at their Kemper facility. And they're looking to sell that technology right over in China as well. And that's the only thing they stand to gain from this, because they're not coal producers, they're just selling the technology. So these companies that Rolling Stones is attacking are really trying to help the environment while allowing these countries to use a cheap fossil fuel, because natural gas and oil is way more expensive for them than coal is, especially when you compare it to the United States.
All right, that's going to cover it for some headlines. Let's go to some earnings, specifically Spectra Energy. They released this morning and the stock headed upwards after they beat analyst expectations. What did we learn this morning?
Yeah, the stock I think would be up even if the overall market was down. They had a great quarter and a great 2013. It was in a state of flux, but in a good way. They were dropping down assets to some of their MLPs. You look at Spectra Energy Partners, and then they also have DCP Midstream, which is a 50-50 joint venture with Phillips 66. Overall, this company had a great year, and they've got a lot of momentum heading into 2014.
All right, beyond 2014 or 2014 and beyond, what do you think of this as a long-term buy?
I think it's a great long-term buy. You see what they're trying to do here is allow Spectra Energy, with their solid balance sheet, they did drop down a lot of debt to Spectra Energy Partners, so they're investment grade. They can go out and make acquisitions and continue dropping down these assets to their MLPs. And then they just sit there and collect their general partner interest and distributions from all these different entities that they have up below them. So I think they're in a great position. They grew their dividend by 9% in 2013, and they're looking at, over the next decade, to spend $25 billion on growth projects. And what I like about them the most is that the Spectra Energy Partners and DCP Midstream are in the business of transporting natural gas and natural gas liquids, which especially natural gas liquids are in very much in a shortage of transportation capability. So they're ideally positioned geographically and on a resource basis. So I like this company a lot.
All right, well, that is going to do it for today. If you're looking for more energy sector coverage, you want to follow us on Twitter at TMF Energy. And you can also drop us a line at energy@fool.com.
Right.
For Taylor Muckerman, I'm Allison Southwick. Thanks for watching.